Hi everybody, it's FIBO Group and you are watching to the Market Watch review. Shares fell worldwide Tuesday due to fears of weak earnings and slowing economic growth. Futures on Nasdaq lost 2.06%, while futures on S&P 500 fell 1.47%. This was due to a 1.4% decline in MSCI broadest index for Asia-Pacific shares. The benchmark STOXXX index for European shares dropped 1.1%. The dollar index, which measures its performance against a basket major currencies, fell 0.2% to 101.95. This is a one-month high. Gold gained some ground after the dollar pullback, reaching $1,858 per ounce. Oil prices are caught between concerns about a global downturn and higher fuel demand due to the U.S. summer driving seasons and Shanghai's plans for reopening after a 2-month coronavirus lockdown. U.S. crude oil fell 20 cents per barrel to $110.10. Asian Pacific market. China's zero-COVID policy and lockdowns have already caused significant economic damage. UBS and Goldman Sachs, two of the world's largest investment banks, have lowered their 2022 China growth forecasts. According to the International Monetary Fund's head, she doesn't expect major economies to enter recession but can't rule out it. Japan's manufacturing activity increased at the slowest rate in 3 months in May due to supply bottlenecks. Toyota also announced a reduction in its production plans. The 127 support zone is being tested by the US dollar against Japanese yen. After yesterday's gains, the Australian dollar has consolidated. Market of Europe. Although there are concerns about global economic threats, the main theme of the Davos meeting this week was that tight supply has limited the price drop. Analysts believe that the European Union is closer to imposing a ban on Russian oil imports, a move that will tighten the market. According to Germany's economy minister, such an embargo could be reached within days. As odds of an ECB July rate increase narrowed, the euro held at near one-month highs. After a 2-week high of $1.26, the British pound fell to $1.25. This was after the most recent PMI data indicated that the economy suffered a sharp slowdown in May due to rising inflationary pressures. Market of America. Given that the Federal Reserve is likely to raise interest rates by a full point in the next 2 months, analysts have reduced growth forecasts for the United States. Fed speakers and minutes from the last policy meeting on Wednesday will likely reinforce the hawkish message. The VEX Volatility Index, also known as Wall Street Fear Gauge, increased to 29.39 points. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.